Hello and welcome to the weekly market commentary. I'm your host Alex Chalekian of Lake Avenue Financial. We hope you enjoyed your Valentine's Day and your President's Day holiday. Let's review the markets from last week. We had the markets close higher last week with the S&P 500 hitting an all-time high. We saw the S&P 500 go up 2.1%, the Dow was up 1.14%, and the Nasdaq was up 3.18%. Now, the S&P 500 did hit an all-time high, but we need to keep in mind that Apple also hit an all-time high. Shares of Apple make a big percentage in the S&P 500 index because it's not an index of just 500 stocks all flat, but it's an index that's market cap weighted, which means that Apple has a bigger percentage of that index. So if all things being equal, if all the other shares stayed the same and shares of Apple came down in value, you would probably see the S&P 500 come down as well. Now, we also had some other major economic reports from last week. We saw import prices drop 2.8% month over month, retail sales were down 0.9% month over month, and consumer sentiment was down to 93.6. And as you can see, the consumer sentiment has been starting to reverse the trend and head lower. That may not be a great sign for the stock market. Now let's take a look at our focus list for the week. So as I just mentioned, shares of Apple hit an all-time high. The stock price passed over $128 a share today, giving it a market cap of over $745 billion, which is almost twice that of ExxonMobil. As we discussed in our last video, is there much innovation going on at Apple? Now this seems to remind me of the rise and fall of Microsoft in the late 90s. To be clear, we do own Apple for our clients and have been on the right side of the trade. But our research shows that it's also a good time to lighten up on the shares and look for an opportunity to enter at a lower price point. Remember, being greedy is not a good investment strategy. Now, even with an improved job market, student loans are getting harder to keep up with. While households are generally doing a better job making payments on their mortgages and credit cards, the delinquency rates on student loans worsened in the last 3 months. Overall, household debt levels rose 1% to $11.8 trillion in the fourth quarter of 2014. Student loans now total $1.16 trillion. In a recent survey, millennials said that if they weren't paying off their debt, their biggest financial priority would be buying a home. It seems to us that student loans might be the next bubble to burst. On Monday, we had the Greek financial markets drop, but kept their composure today after the debt talks with the Eurozone broke down, on expectations that Greece and its European partners would eventually agree to a compromise. Greek government bond yields rose as much as 110 basis points, and stocks fell 2.5%, which was limited moves by the standards of Greece's illiquid markets. The talks on Monday broke down in less than 4 hours, far sooner than expected. Earlier today, both parties said they were open to a resumption of talks. Greek Prime Minister Alexis Tsipras said his government could not succumb to blackmail from its Eurozone partners and was in no hurry to reach a new debt agreement. We're eager to see how things turn out. The outcome of this could affect the European Union and those who are investing in Europe or in euros. Be careful. Now, the fourth quarter earnings season has been a disappointment as profits have been hurt by lower oil prices, a rising US dollar, and outsized telecom company pension charges. The energy sector has contributed $1.82 to this quarter's earnings so far, compared to $2.75 in the fourth quarter of 2013. This decline can be directly attributed to falling oil prices. The S&P 500 operating earnings per share may have also been reduced due to a stronger dollar, which lowers the value of the U.S. company's international revenues translated back into U.S. dollars. Thank you for watching our video. We'd love to hear your comments. To watch some of our other videos and read our blog posts, please visit our website lakeavfinancial.com. There you will also be able to subscribe to our weekly newsletter. You can also find us on Twitter, LinkedIn, and Facebook. And remember, here at Lake Avenue Financial, we manage your wealth with your goals in mind. Thank you for watching.